A lot happening in D.C., all about the stablecoin bill, but also some other issues that we'll break down today for you guys. You don't want to miss it. My name is Paul Barrow. Welcome back into Tech Path. Let's get in started. I do want to thank our sponsor. This is Coinbase. This, of course, is a great place for you guys to start your crypto journey. And whether you're investing in Bitcoin or Ethereum or another altcoin, digital assets in general, you can do all of that over on Coinbase. It's very easy to set up. You can get up to $200 in crypto when you get started just by using our link down below. So do that. It does help the channel. Let's break into it today. I want to get into the topic of yesterday's video we put out, and that was all around the stablecoin bill that was going to go through. And Elizabeth Warren, at the 11th hour, came in with her minions and were able to pretty much stop what was going on. And even John Deaton kind of put a little bit of a fun tick on our clip yesterday, because the whole point is that they still do not understand crypto. Elizabeth Warren was able to recruit enough Democrats to be able to stay that bill to where they're going to probably get another shot at it on Monday. Let me go into a clip to kind of give you a recap. Take a look.
Not having voted in the affirmative, the motion is not agreed to.
This is a vote to kill the crypto industry here in America, and it's a shame.
It frustrates me to watch people look me in my eyes and tell me we're almost there. I just need one more thing. It frustrates me to watch them turn their back.
I don't know why you vote against proceeding to a bill after you voted to refer that same bill to the floor.
In fact, we had a vote of 18-6.
Which, of course, makes you wonder if this is about the bill at all.
What changed? What changed? Politics.
The Democrats have the power to say no, and that's exactly what we just did.
We're not shutting down. We don't want to shut this down. I want to be clear. Do you have enough members across the aisle that want to see this pass? So what I'm going to be asking for is that we collapse today's vote and Monday's vote into a single vote on Monday.
Quote, the world is watching while American lawmakers twiddle their thumbs.
One of the most important things to keep in mind is if you just look at Bitcoin, it doesn't matter, right? Bitcoin doesn't care.
We are not defeated. We are simply delayed.
All right, so all this being pushed off to Monday, most likely for a new reformatted bill for stablecoins. This is going to be a good conversation. I want to bring in Jennifer Schulp, who is coming in from the Cato Institute, who has been around this topic quite a bit, not only the stablecoin side of things, but also some of the derivatives that will get boiled into this, primarily around accredited investors. So Jennifer, thank you for coming on the show.
Thanks for having me on.
All right, so Jennifer, let's just break down. First of all, I want to get your opinion. Do you feel like Monday is going to change the course of this legislation at all?
So I'm not positive it's going to be Monday, but I do expect this legislation to come back to the floor at some point. The politics are difficult. There's been a lot of focus on the Trump family's activities in the crypto space, and that's made it a lot harder for these bills to move in kind of a bipartisan or even apolitical manner.
Right.
So I think there's a lot of agreement about the substance. I hope that shines through, and I think there's a lot of opportunity for that agreement to still make it a reality.
Banks will most likely go this direction. We see all sorts of companies that have already started to move in this direction. So it definitely is going to be intriguing. I want to talk a little bit about the associated component related to accredited investors. Now, you've done a lot of work on this. Here's a little bit from the Cato Institute right here, Sophistication or Discrimination. Primarily the write-up you had here is all about how accredited investors work. And for those of you that don't understand this, in my opinion, this is one of the big issues that sets up the wealth gap here in the United States. Maybe you could give us a quick rundown of how this could possibly change here if we were to get something that would be pro non-accredited investor.
Sure. So the accredited investor standard, if you're not familiar with it, prohibits most people from investing in most private securities offerings. So the type that aren't on the NYSE or NASDAQ, unless those people make a certain amount of money. The thresholds are a salary of at least $200,000 a year for a single person, $300,000 a year for a household, or have a net worth of over $1 million. The numbers kind of shift on that, but it's somewhere between 10 and 20% of the population now qualify to be able to make those investments. But that means most Americans can't invest in private investments. And private investments tend to be for the smaller companies who are just starting out, where those investments might be riskier, but there's a lot of more upside in terms of being able to make a bigger return, assuming that the risk doesn't flow the other way. In fact, risk and return are two sides of the same coin. So in order to be able to make those returns, you've got to take on more risk. And this accredited investor standard blocks people from being able to do so.
From Van Eck, he's basically saying, hey, one of the biggest keys of Fit 21, which is going to be kind of a companion bill, I believe, that will most likely get passed almost at the same time that this stablecoin bill gets passed. The biggest issue is no accredited investor or suitability checks. That would be a huge change in the current status of how accredited investing and just general investing works. Do you think that that will make it through and actually get voted on to where, you know, any American could go out and really start to expose themselves to, you know, these kinds of tactics as far as investing?
So the market structure bill that the House has put out for discussion at this point is basically limited to kind of the crypto space. So I'll talk about that rather than kind of the broader all private market investments. I do expect that any sort of final market structure legislation here will allow people to generally invest in these crypto commodities rather than limiting it to accredited investors. In fact, that's been one of the problems right now is if you want to try to create a securities law compliant crypto offering, you have to comply with these private offering rules most of the time, limiting you to accredited investors. So the crypto opportunities, which are meant to be broad-based, available to everyone, that's the whole great part about crypto, kind of democratization of access and availability on the blockchain. Well, as securities right now, you're probably limited to offering your token to people who make over $200,000 a year. That doesn't work. It's not just against the crypto ethos, but it's also against the ability of people to participate in this system.
Yeah, I think that this is one of the biggest challenges of the industry. It's been around for, you know, traditional investing for quite some time, but as it flows over to the innovation around crypto, it gets pretty intriguing. I want to go to a clip because this is where some people believe this has actually damaged our economy. Take a look.
What was the cost associated with it? What did you raise and what did you spend?
Right. So our Reg A raised about $15 million. It cost probably $3 million to run the Reg A. And that's why we see small teams who are trying to be upstarts moving offshore today.
And so you would agree that we have to create a new system?
Absolutely.
All right, so he's talking about a Regulation A. This is a funding round, you know, for companies that are out there raising capital. A lot of overhead to be able just to get that done here in the United States because of all of the stipulations, requirements, legal fees, filing with different organizations, obviously with the SEC, and many more. I mean, that would be a major boom, I would think, for innovation, for companies to be able to start up here in the United States with a much easier access to private capital. Do you think that can really happen?
So I agree. I think it is a great path opener for innovation and for private companies. Regulation A isn't simply limited to accredited investors, but it's very expensive to do a Reg A offering. And it was designed to be a cheaper alternative to a full-scale IPO.
Right.
Well, it's still very expensive. And for smaller companies that are looking to raise from everyone and looking to raise smaller amounts of money, it's just not feasible. I do think there's a path here for crypto to be able to have its own exemption and to be able to do more broad-based fundraising more cheaply. I think assuming that we get past a crypto bill, I would expect that to be in a crypto market structure bill. And actually, that's part of a broader conversation that's happening just outside of the crypto fundraising as well. There's been a lot of talk on Capitol Hill about how do we make it easier for companies to raise money, particularly small companies. And there's a lot of bipartisan support for clearing those pathways and making it easier for people to innovate and to build businesses. So it's not just that crypto is moving on its own. It's that crypto is moving as part of a bigger conversation here about making it easier to help our economy grow.
If this ban were to get passed, meaning to where everyday individuals could invest in different companies like this, how much of an influx in terms of potential pipeline opportunity is there, especially from the capital side of things? Would you wager to guess at what that might look like as far as what it might do to impact the industries?
So I don't have a good number. I'm not the numbers person on these things, but I think it opens up a lot of potential capital. On the crypto side, it opens up everyday average investors to be able to participate in the projects that they think are worthy. And more broadly, it opens up opportunities for investors to take a chance on something that they think is going to be, I would say, the next generation, something that they want to see happen. Whether that ultimately translates into everyone being able to get into the investment that they want to, I think is a different question. There's a lot of other rules in the security space that sometimes make it less attractive to have people putting in $100 as opposed to $100,000. So there's a lot of moving pieces here, but I think undoubtedly if we made the opportunities available, people would move towards taking advantage of them. And I think that that has positive impacts on innovation and entrepreneurship.
Well, there's a couple of things that are brewing right now. I want to go to a clip and then I want to get your opinion on this, because this could be maybe a new format that's going to be laid out for making this available to everyday people, investors. And if you look at the demographics that are really entering the investing category right now, a lot of that is millennials, and eventually we'll see Gen Z in here as well. They are much more tuned in to crypto, digital assets versus traditional markets. I want to go to the CEO of Robinhood. He talks about this very issue. Take a look.
And you also have things like meme coins. That's sort of like my dark horse contender of what could disrupt the traditional IPO. Once a system gets to a certain level of cruft, it's hard to kind of like reform it from the inside. It's small at first, it's niche, but then more and more people start using it. It becomes useful. You can imagine a multi-tiered system of listings based on the level of disclosure. You're a startup and you don't want to make any disclosure. Well, maybe we put like a red skull and crossbones when we're sort of like presenting that asset to customers. If you can make raising capital for a new venture as easy as, launching a meme coin, you just press a button, maybe upload some information, create some information about your company, and suddenly you get access to this global market. That would have been useful for me starting out.
So you look at Robinhood, who's kind of reformatted finance in general. If you just look about stock trading, now with crypto, they're now becoming or attempting to become a bank. They're already doing credit card services. This could be a major leap in the direction if we do get an accredited investor ban, this issue banning the requirements. Do you think that would open up what Vlad is talking about there, where maybe a Robinhood could literally create almost instantaneous IPOs for a lot of these kind of companies?
It's a really optimistic vision, and it's one that I'd like to see us move towards, where right now, what we have in terms of capital raising is a very fragmented system. It's overlapping, it's complex. If you want to invest in certain types of investments, you need to know the right place to look for them. You need to know how to get there. Yep. Back in 2012, when they passed the Jobs Act and created equity crowdfunding, the idea was that you could go and create kind of that skull and crossbones level that Vlad is talking about there. The smallest companies providing the most minimal disclosure. But you can't get those on a standard exchange. You have to go to a specific place to find them. And if
Yep.
we were able to have a more kind of unified system where I would say tiered fundraising is one way to, tiered disclosure is one way to think about it. But being able to ease the path of investors to finding those opportunities and ease the path of entrepreneurs to be able to raise the money.
Right.
Being able to do a stock offering as quickly as a meme coin is a wonderful thing. I say it doesn't involve tens of thousands of dollars of lawyers at a minimum, and weeks or possibly more of SEC review. That itself adds a lot to the ability of people to innovate and to build businesses.
Well, I mean, in reality, launching a meme coin, now that the SEC has deemed it not a security, almost gives companies the ability to do things like that, at least from a, I guess if you want to call it a capital raise or a membership fee or whatever you make. But the key is there's no promise. There's no promise that there is a return on capital. So that's going to be interesting to see how this could play out, because if it does get legitimized, I mean, you look at projects like AngelList and the syndicates that have been built around this in the past for those kinds of the hybrid approach toward being able to invest. How much of an impact do you think this will have on the VC world? Would it be, if everybody could become an investor today, if that bill or that particular rule didn't exist, would this impact the VC world?
I think it changes the VC world. I'm not sure that we, lose the VC world, because as I said before, there's a time and a place for investments of $100,000 or $1 million. That's different from the time and the place for your startup first $1,000 or your first $25,000. So there remains place in the ecosystem for a lot of different types of investors. I would say in VCs also, VCs and angels also bring to the table other things that are not just money a lot of times.
Yeah, for sure.
Entrepreneurship advice and other things. I think it does change the format though, and it changes the way the world works. And it also changes some of the problems that we have in the VC space, where VCs can get caught in a rut. They fund projects that they're familiar with. They fund projects that come from people that they're familiar with.
Yeah, you don't get the new blood.
If everyone's got more opportunity, I think there's a chance for capital to flow more freely between lots of different projects and lots of different people from around the country, not just Silicon Valley.
Yeah, I can imagine where you would have smarter investors that could start to form, their own, in way, I guess, a syndicate with research and tools like that, especially with AI now, to where you can really start to do a lot of due diligence on companies. Essentially, that's what a VC does before they invest, and then actually outperform a VC. Could you imagine? That would be the ultimate. I want to go to one more.
Technology is going to make a big change here too.
No doubt.
Not just in research, but in connecting people who might not have otherwise been connected, being able to reach investors.
Very good point.
It's a new world that's been changing slowly, but I think it's going to start changing a little bit more quickly now that technology's sped up.
Yeah, I love that crypto is kind of leading away, or at least knocking on the door of where innovation could shift across a lot of different financial sectors. I want to go to this last clip. This is Michael Saylor talking about how many IPOs could be coming if all of this were to open up. Take a look.
Trump coin may be valuable because Trump's a celebrity. Katy Perry token could be valuable. Tom Brady coin could be valuable. On the other hand, some of them won't be valuable. There's 400 million companies in the world. I can imagine every company issuing their own digital token. Yeah. You're a country club member, I tokenize it, you can trade it. Tokenized country club membership would be more valuable than non-tradable, non-fungible.
So what Saylor is getting at is really almost like an entire new ecosystem of how funding could occur. Whether it is a stacked digital token that's related to a more eased IPO process, or maybe even something more relaxed, like, I mean, even if you go down all the way into, private investing, like a Regulation D, where you can raise like $1 million, with the SEC still, but it does open up a lot of opportunity here. When you see what Saylor is talking about, do you think that's feasible for companies to just start raising capital based on a token ejection?
I think it depends on the company, and I think it depends on where our securities laws end up on this front. Because I would say what Saylor's talking about too is a lot of tokenization that may or may not be a capital raise.
Right.
The country club membership might be a different type of tokenization. Trump coin might be a different type of tokenization depending on what it is they're going to do with that money. So it really depends on how well we create a regulatory system that functions in this space, unlike the one right now that does not function very well, as to whether or not tokenization is going to become a better way to do capital raises. I don't think it is today, but part of that reason is that the securities laws are not modernized to take into account and to permit this to happen. I think there's plenty of space for that change to happen, and we're seeing some good progress on Capitol Hill and within the SEC itself towards, say, recognizing the benefits here that could come.
Well, I know the crypto summit coming up, you're going to have BlackRock in there, obviously talking about tokenized securities. You're going to have Robinhood in there trying to figure out how to create this next generation of investors and getting them into a quicker ramp up to have access to assets, outside of traditional stocks, along with a handful of other Wall Street types. So the likelihood is that finally we're going to see a lot more integration coming down the pipe here. Again, it just gets back to the framework. If we can get the legal framework from DC aligned, innovation could really just start bubbling up from anywhere within the Wall Street ecosystem. So a definite lot of opportunities here for sure. Hey, it's been great having you on the show. Thank you so much, Jennifer, for coming in. We appreciate it, and we'll definitely have you back as things get going here on these bills.
Yeah, this has been great. Always happy to talk.
Excellent. Thank you so much. All right, guys, if you're not in the Diamond Circle, make sure and jump in on that. This is a great place to get additional content from us. It's our own private email group, and you can join for free. It's very simple. We always leave a link down below. And if you are also wanting to communicate with me directly, I'm actually in the Telegram group, and I chat in there with users all the time. Feel free to jump in on that. We leave a link. We only have one of those groups, so watch out for the fake ones that are out there. And of course, follow me on X @Paul Barron. We'll catch you next time right here on TechPath.